Last week, I talked about what's happening with Evergrande in China, saying why it can be compared with Lehman Brothers and why it cannot be compared with Lehman Brothers. What we talked about last week was the overall picture of this crisis, how Evergrande crisis can spread to other companies, for example, the Chinese banks, and even companies outside China, for example, Apple and Freeport McMoran. I said that we were going to talk about this more in the future because this is something very important happening. But today I want to talk about this company, this particular company, Evergrande itself. What is it about? Let's do a normal stock analysis of Evergrande as if we were going to invest in this company. I can already tell you immediately, no, it's a bad idea to invest in this company. But just for the sake of it, let's do the complete analysis. Let's look at the financial numbers, let's look at the financial statements and see if we can put a price on this company. One of the main differences between Lehman Brothers and Evergrande is that Lehman Brothers, people didn't know the problems the company faced. Only when the crisis started, then the ratings of Lehman Brothers bonds started to get downgraded. But Evergrande, their bonds have been downgraded for years. So people already knew that they were going to face some troubles. But the troubles only started in reality when we had the pandemic in China. Actually, activist short seller Andrew Leff, I don't know if you remember Andrew Leff, we'll talk about him again today. We talked about him before when we were talking about GameStop. So Andrew Leff, he's an activist short seller. He wrote a report 10 years ago about why Evergrande is going to fail. And that report got him suspended from trading on the Hong Kong exchange. For 10 years had been suspended. It's mostly because activist short selling is not something very welcome in China. But it's okay. What's important is what was in that report 10 years ago. We need to look at this report, to read the report, to see what was in it, and to see if he was right about the things he said and how things changed. Because that report, it was a good one, yes, but things changed and some of the things got better and other things got worse actually. Before we dig deeper and talk about Evergrande and this Citron Research report, make sure to smash the like button for the YouTube algorithm. If you're new to the channel, my name is Ishfaaq. I am an elite popular investor on eToro with over $2 million in assets under management. So please subscribe and hit the notification bell so that you don't miss the coming videos. So what exactly is Evergrande? This is a big company. It is 122nd on the Global 500 list, which means last year, it was the 122nd company with the largest revenues in the world. It is a big corporation, as not only in China but all over the world. In China, it is the second largest property developer. So in China, you cannot really own land. If you are going to buy a property, indirectly, you are renting the property from the government. But you don't pay the government directly. What happens is that these property developers, they are the one paying rent to the government. The government is going to give them the land and then they can use this land to develop it, to build things and sell it to the public, to the Chinese market. Of course, if you, let's say you are a property developer, why would you want to do this business? It's because there is demand. The only reason why you will pay rent to the government to own these properties and then sell them, to build on these properties and sell them to the public, it's because there is demand, and there is demand in China. It's mostly for cultural reasons that there is a rising demand in China for properties. In China, if you're a male, for you to get married, most probably you need to be a homeowner. So there is demand because of this, it's the culture there. There is also demand because people moving from villages to the cities in China, in order for them to be a resident of that city, they will need to own property in that city. This is how residents work in China. If let's say you're living in a village, that is your house, this is your place of residence. But you move to the city, if you don't own a house there, you're not considered a resident of that city. So your child will not be able to go to school in that city. So you have to own a property. It's better for you, instead of renting, to buy something in China. Of course, if you cannot afford to buy something big, you don't have to do it. You can buy something small. And the third reason why there have been a real estate boom in China is because real estate is a really good investment. Since 2017, we had the trade war, the US versus China. We know that Chinese equity has been doing poorly, and people in China do not really have the same options as people in the US to invest internationally. So people with a lot of money, they will choose to invest in properties in real estate. Also, the government saw that things were getting out of control. There was a real estate bubble, and they tried to minimize the bubble, but it got worse. Because let's say you're going to limit the number of property that someone can own, let's say to 3. This happened in some provinces in China. So you cannot own more than 3 homes. I think Bernie Sanders was following this rule. But if you cannot own more than 3 homes, what you're going to do, you are going to buy the best ones. You are going to try to buy the best property, and you know the prices are going up. You will try to buy at even higher price, pushing prices even higher. So in some way, because of these government regulations, the real estate bubble in China got even bigger. And it's not just a real estate bubble we have in China, but also a corporate debt bubble. And this company, Evergrande, they had a lot of debt on their balance sheet. And this is not something recent, it's something that happened even 10 years ago. That's why Andrew Lev from Citron Research wrote this report. And in that report, it's not only the debt problem that they saw, but other problems too. For example, compared to the competitors, you will see that the assets of Evergrande seems to be growing faster. And he says it's because of fraudulent accounting. But today, this fraudulent accounting is no longer here because the government intervened. There were regulators involved, even though the Chinese authorities were not happy with what Andrew Lev did. Even in that report, he wrote that the government was already investigating Evergrande. So the government intervened and they had to change these fraudulent accounting practices. Today, you look at Evergrande, the financial reports, the financial statements are audited by PwC. This is something rare in China. They are audited by PwC and considered to be fair and true. So the numbers you are seeing today are true. But still, the type of accounting they are using, it's legal, yes, but it's not something that I will say is ethical. So here's what they do. If let's say you want to buy a house built by Evergrande, since Evergrande has almost a monopoly on the market, you cannot really do like in the US, you will look for the cheaper house or anything like this. There is no free market in China. What they are going to do, they are going to give you a price, you buy at this price, but they don't really give you the current market price of that property. They give you a higher price and you are forced to buy it because you know you have to buy it. Maybe you want to get married, you don't have a house, your girlfriend's parent won't be happy that you don't own a house. Of course, you have to buy it. If you have to buy the house, let's say the price is 10% higher, you will have to buy it. It's because they are selling you at this price. But now what Evergrande will do is that on their balance sheet, they are going to put the price of the price at which they are going to sell, which means 10% higher, not the current price. So they are putting the future price on the balance sheet. So all these assets you see on the balance sheet of Evergrande, most of them are inflated. It's future expected prices. They were expecting everybody, the banks giving loans. These people who are buying homes, they are not buying it with their own money. They are taking loans from the bank. When they take loans from the bank is not unhappy with the higher prices because they expect that real estate prices will always go up. But as we saw last year, real estate prices in China started falling. And it's mostly because of the pandemic. We'll talk about why prices fell. Now let's talk about the second point that Andrew Lev made 10 years ago. He talks about the pet projects of the chairman and CEO of the company. That man, Xu Jiayin, he owns about 70% of the company. So he has a lot of control on the company. And he was doing a lot of pet projects which are not really related to the main business. And it is possible, of course, for companies to diversify in other things. There is nothing wrong, but this seems to be unrelated. It's like what Coca-Cola did in the 1980s when they bought Columbia Pictures. It's something unrelated to their main business, which is a bad idea. And besides, according to Andrew Lev, and this is something even I noticed, that it seems that this man is taking all the decisions to make this acquisition, this pet project. It's his project, not really something that the shareholders would be happy about. So he's using the funds of Evergrande to make his own projects. Now let's talk about the most important troubles of this company is the debt. When Andrew Lev wrote that report 10 years ago, the company had only $12 billion in liabilities and he said that it was on the brink of collapse. 10 years later, they have $300 billion in liabilities. They have been taking a lot of debt to build these homes and selling to people and expecting that prices will go up. The banks have been giving them money, giving these people money expecting that prices will go up. And now we know that real estate prices since the pandemic has not been going up in China. But the troubles itself started well before the pandemic. You will see in 2019 that the company had a negative operating cash flow. So I was surprised, why do they have a negative operating cash flow even though profits were positive? It's because they had homes held on sales which they had not sold yet, and because of interest expenses. When you take loans, you have to pay interest on those loans, and in China, loans are not like in the US with very low interest rates today. So they have to pay interest on those loans, and they have loans not denominated in Chinese yuan but in other currencies, Hong Kong dollar and also the US dollar. And paying these loans means they have to do currency conversion. It's a lot of expenses to repay these loans. Much of these loans are short-term current liabilities. Here we need also to consider the accounting rules in China, that the property under development are considered as current assets because they say they are going to sell it in less than a year. This is only applicable, this is only true if they can be sure 100% they are going to sell it in less than a year. If let's say we have lower economic growth, we have a pandemic, of course they won't be able to sell these properties. Then it's not current assets. So if you look at the current ratio of Evergrande, it looks good. They have enough current assets to repay the current liabilities. But in reality, this is not true because property under development is not a liquid asset to me. This is long-term asset. This is not a current asset. Even though, according to the accounting rules in Hong Kong, it's like this. And in 2019, you will see that they had 176 billion US dollars to be paid in 2020. So for 1 year, last year, they had to pay 176 billion US dollars with only about 24 billion US dollars in cash and cash equivalents. So how were they able to repay all of this? They had to take more debt to repay all of this. And at some point last year when we had the pandemic, things got out of control. They cannot really afford to take more debt because now the government is more careful. There are more regulations. The banks also are more careful because the real estate prices are going down. So they don't want to give loans backed by real estate properties. There's also more regulations from the government because of Evergrande being a monopoly. And also maybe the government is being careful by trying to prevent a financial crisis. So they are putting pressure, they are putting regulations on high leverage companies. And this one is a high leverage company. And finally, there is an issue that commodity prices are going up in China, in all over the world because of the pandemic mainly. There has been disruption in the supply chain, so commodity prices are going up, so prices of properties are going up and people cannot afford them anymore. And even they cannot afford to build these anymore. For example, you will see that next year, this company has 7.4 billion US dollars in debt to be repaid. And it's not just the debt that needs to be repaid, there are other expenses that are involved, which probably they won't be able to repay it. That's why the company today is on the brink of bankruptcy. And today I'm recording this video, it's Wednesday. They have not gone bankrupt yet, but I'm going to post this video on Monday. So I don't know if they are going to go bankrupt. And if they have already gone bankrupt, it was inevitable. There are expenses which they have to pay this month. It's about 40 million US dollars bank loans. These are bonds I'm showing you, but what about the bank loans? I did not show you the bank loan. They have also bank loans, which probably they won't be able to repay this month itself. So the probability of them going bankrupt is very high. Of course, it is possible that the government intervenes and saves the company. It is too big to fail. There is also the possibility that the government let the company go bankrupt. Maybe this is more likely, but the government then is going to save the banks because the government owns the banks. So we will need to wait and see what happens. As far as Evergrande is concerned, this is very bad investment. I would not touch it with a 20, even a 100-foot pole. This is a company to stay away from. Even the bonds is better to stay away from. If the company goes bankrupt, maybe then they have some restructuring. It may look like a good, if it is good, then maybe we'll look at it. But today, a company on the brink of bankruptcy like this, it's better to just stay away. If let's say the company is going bankrupt, they have some restructuring, maybe we can consider to look for their bonds. Maybe we can consider something, but not today. Today is better to just stay away from it. But what interests me the most is not this company itself, but the competitors. If this company go bankrupt, this is good for the competitors because eventually the real estate market in China is going to recover. The economy of China itself, if let's say we have a big financial crisis, it's going to recover. It's not just real estate, it's all these companies in China now which are being affected. Eventually, we can expect them to recover. So there are going to be opportunities in China if you know where to look. For example, in 2008, one of the best investments you could have made was Citigroup. The company was a four-bagger in just a couple of months. Because it was so undervalued. So if you had invested in the company, you sell after a couple of months, it would have been a four-bagger. Most of the times when there is blood in the street, this is the best time to buy. But right now, there's not really blood in the streets. And that's why I prefer to stay on the sidelines. I already have some investments in China, but I don't want to invest more. For the time being, it's better to just stay on the sidelines to wait and see what's happening. So let me know in the comments what do you think about all of this about Evergrande. Thank you for watching this video. Please like, subscribe and share. Please watch these two videos if you have missed them. Have a nice day and goodbye.